And that's how I made 14% in 1 day trading gold.
Hey, what's going on guys? Welcome back to another YouTube video. Today I want to share with you how I managed to make 14% in less than a day just day trading gold with very simple but effective elements. The most important part of being able to make 14% in 1 day trading gold was massively on my psychology. The technical analysis elements which I'm going to show you were actually very simple, but the way that you become a consistently profitable and good trader is being able to have confidence in yourself, zero hesitation, and have the correct mindset. If I didn't have the correct mindset, I would have hesitated and I would have missed these moves. They were very simple moves, but like I say, it's the psychology aspects that I want to share with you guys and how you can build more confidence in your trading. So I'm going to share these all in this video, and I think they're going to massively change your trading game. So stay tuned for the whole video. I'm going to share some very important tips, and at the end I'm going to show you my current swing position on gold as well. So you guys know that I love to swing trade, but as you guys probably know, gold has been very range bound for a long time. I think we've been printing doji candles for the past 10 days. So I decided to have some fun with day trading, try the same tools that I use in high time frames on lower time frames, and I managed to catch 14%, risking just 2% per trade. But I'm going to share this all on the charts with you guys, so let's jump straight into the video.
So guys, this is gold on the 4-hour time frame, and what we can see is gold is in a really nice downtrend. So what we can see on gold is we're creating a series of lower lows, lower highs, lower low, lower high, and now a new lower low for a new lower high to potentially then come down and create a new lower low. So I wasn't actually playing for the move all the way back down here. Like I say, I was just day trading this move. So what I saw on the 4-hour time frames, I always have my mind made up on the higher time frame. So if the daily's looking bullish or the day is looking bearish, I want to see the 4-hour looking the same. So on gold, the daily was bearish, 4 hours bearish. So for me, when I'm scaling down to day trading positions, I want to look for sells. I'm not really interested in going against the overall trend because that's just very high risk. What I noticed on gold before I even went down to lower time frames is we seem to be creating this level of resistance, this double top area. What I was wary of is gold coming up and actually spiking out these highs and pushing back down, because as you can imagine, if a lot of retailers are selling here, they got their stop loss just to buy, just above this high. So we can expect that price is likely going to come up, stop out a lot of people, and then have the real move. So anywhere within this region, I was looking on lower time frames for sell opportunities. So scaled my way down. So guys, even here now on the hourly time frame, I've moved price forward a little bit. What we can see is we are actually now creating another level of resistance. So what you can imagine is with this level of liquidity sitting just above here, not a lot of retailers will pay attention to this. So a lot of retailers, again, will start to take shorts here with their stop loss just above here, maybe even a little bit just above this high. So let's say, for example, retailers jump in shorts here and they've got their stop loss just sitting around there and looking to catch this next big jackpot move. So that's what I was looking at. I didn't take this. For me, in order for me to take this trade, I wanted to see price come up into this region and stop a lot of people out. So if we just skip price on a bit, bang, there it is. So that's where I'm going to replay and go into lower time frame, but this is where I call my entry based off this wick. So look, as you can see, a lot of retailers have been stopped out from this region. As you can see, the way that this candle has closed is a really nice wick rejection, showing that there's potential downside to come. And I actually took advantage of this wick. So let me just replay, clean this up. This was just to show you guys how retailers get stopped out. So if you find yourself trying to catch really tight risk to rewards without understanding liquidity points in the market, and you keep getting stopped out and then price moves in your direction, stay a little bit patient and understand these points. So let's just clean this off. Delete this, and I will show you guys where I actually entered on the 5 minute. And I wasn't looking to catch this all the way down. I wasn't looking to catch that at all. This was just a day trading move, and wrong button. And what I was looking for was just to play this in a sort of range. As we can now see, gold is just very range bound. So there's no real clear direction in terms of swing trading. This is why I decided to have fun with day trading. So as you guys can see, lots of rejections above this zone. This is where retailers would have been going short, stop loss above this high or previous highs. And what I wanted to see in order for me to take shorts was to price come up into this region and then to see a pushback down. So skip this on a bit here. Okay, this is exactly where I then look to enter. So as you can see here, this wick has now taken out this high. So this is a very, very simple manipulative liquidity grab before having the real move. And this is exactly what I wanted to see. On the 15-minute, I could see that this candle was going to close very, very bearish without even me needing to go onto the 15-minute time frame. Looking at the 5-minute, I can already see that the 15-minute is going to be bearish. So for me, this is a really nice stop hunt and liquidity grab. And this for me is where I now want to look to enter. So I think I actually entered as this candle closed. So as we're going to close, I think I entered maybe here. The candle's probably going to shoot down, okay, as expected. So this is where I took my short position. As this candle closed, I knew the 15-minute was starting to show very, very nice bearish signals. So I entered a short. My stop loss was above this high, and all I was looking to do, I wasn't looking to catch a huge trade. Remember, this is just a nice day trading move. All I was looking to do is just to play this little simple range, and I actually risked 2%. I always say to people 1 to 2% risk per trade. The reason I took 2% on this is just because I was having fun with intraday moves, and I have other swings on gold running, so I'm allowing myself to take a little bit more risk as I have them positions running. So really, really nice. Gold pushed down very, very bearish straight after this, and this is when if we go back onto the hourly, look at that, bam, smashed down even lower. And if we skip this on, we actually broke this low, came back up for the retest. I think a lot of retailers would have then been looking to go short on a break and retest, but I think we actually decided to push up a little bit higher. So I think retailers would have got stopped out on gold massively to both sides. So yeah, then we broke back above. So retailers on this move would have got massively manipulated on gold. So for me, this one, I closed out a total of 8% on this trade. Obviously, it's a 1 to 4 risk to reward, but I risked 2% per trade. And this was a very, very simple move. 8% in the matter of, I think it was less than an hour. So you can see the wick that I caught here, guys. This is the wick that I caught. The candle, after I saw that hourly candle closure, I was more than happy to keep holding this. Obviously, I could have pulled out a little bit more. I could have squeezed out 5, 10%, but you're always going to leave money on the table. You just have to be able to accept that. As long as you're happy with the gains that you've made, don't ever think about, oh, what if? Just be happy. For me, 8% in less than an hour was absolutely fantastic. Excuse me, just over an hour. If you have a 100K funded FTMO account, 8% in a matter of, let's say, 2 hours, that's £8,000. That's an incredible amount of money to make trading very, very simple elements. So that's one of the positions. I also took a few more after this, which I will skip on and show you guys, but I just want you to see the simplicity and beauty of this trade. I wasn't looking to catch a huge risk to reward and come way down here. Even if we had come down to these lows, would I have kicked myself? Sure, but you have to be happy with the results that you've made. So for me to make 8% in the matter of 2 hours, I was more than happy with doing so. So guys, just checking my MT4, which I'll show you at the end. Just for transparency, I don't like showing profits or anything like that, but just so you guys can see the positions and show you that I actually took these trades. So after this big push down, did I leave some money on the table? Yes, of course. Is that going to happen all the time? Like I say, yes, that's going to happen. You have to be okay with that. And once I saw price was rejecting this level of support, for me, a minimum to come back up and retest this low was a given, okay? So after a strong break, at a minimum, we're going to come back up and retest this level. And we actually even came up even higher. So again, left some money on the table again. I'm completely okay with that. I actually just went for a 1 to 3 risk to reward. On this one, 2% risk was 6%. And what I need to mention is my short trade from the top, I didn't fully close that position. Why did I not fully close that position? Because it allowed me to take this short with 0 risk, okay? If this long position, so if this long position had got stopped out, I would have just secured the rest of my position from the top, which would have then balanced me out at break even. And this is very, very important to your success. Leave a little bit of money on the table. Although for me, after we pushed down to 4%, I think I locked in a very large amount. I only had a little bit running, but as we continued to push down, that little bit running quickly adds up. And before I knew it, once I got down to this level, it gave me another 2% as a leeway to play around with. And this is the why, and this is the reason I had the confidence. And if you want more confidence in your trading, stop fully closing your positions. Holding little anchors in the markets will really help you out, not only for your trading balance, but also your psychology. If I wasn't holding shorts from here after such a strong push down, for me, I would have got massively scared and my psychology would have been massively playing on me. Oh, look, bearish engulfing, massive wick. Everything in my mind would have told me not to take this trade. But because I had shorts running from the top, I have that confidence. And this is such an important part that I don't see many people teach or share, but I think it will massively help you guys out. So try it. Even if when you're just beginning, you just leave maybe 0.5 on the table. Before you know it, that 0.5 lot adds up to a lot. And now you can take more trades risk-free. So let me just show you why I took this trade. I actually went down onto the 1 minute. After I saw this rejection, I was waiting for that spike lower, exactly like at the top. I was waiting for that stop hunt. And this happens on all time frames. Whichever time frame you want to trade, daily, weekly, 4 hourly, these stop hunts happen and you have to be aware of them and you can trade them to your advantage. So let's go back onto the 1 minute, because this is what I was trading. I was actually trading this for fun. I actually really enjoyed day trading. A lot of you guys know that I swing trade. I had some swing trades running, which I'll show you at the end. And I just wanted to have some fun with day trading. I have swing positions running. Again, more leeway for me to have more fun. And what I saw on this position, so I actually entered on this wick here. That's why I have my stop loss below here. So what I wanted to see is I saw there's 1, 2, and I was waiting for the spike down into this liquidity zone before having that push up. So this is what I was waiting for. When we started to reject here, did I get fear of missing out? No. If the trade had gone off without me, then it is what it is. You move on to the next opportunity. But what I wanted to see was a stop hunt and a big wick for me to judge a stop loss and to get involved with the trade. So after we saw this massive wick rejection, after we looked so bearish, and this can happen to gold on all time frames. Gold can look so bearish, and at the last minute can pull back up. That's exactly what we did. And after we pulled back up with this nice wick, this is where I got involved. Stop loss, like the same as the shorts on the top, stop loss below the wick, and looking to play this up. I was looking to play up into this range, but the way we were just very consolidating up and down, I didn't really want to sit in this range. So for me, I was happy to just get a 1 to 3 risk to reward, which for me, trading 2% risk was a 6% trade. And that's how I made 14% in 1 day trading gold, risking just 2%, nothing crazy at all. And this is the reason I don't like sharing profits, because if I just said to you guys, oh look, I made 14 grand, that's useless for you. You cannot relate to that. I like to talk in terms of percentages so you can relate this forward. So for you guys, if you want to trade with me, join the community, whatever it may be, and you want to take these positions with me, relate that onto an FTMO account. If you had on FTMO, you can have now a £400,000 account. If you made 14% in a matter of a few hours on a 400 grand account, that's 56,000. That's a fucking lot of money. Excuse my French. And this is why I talk in terms of percentages. Like I say, if I repeat myself, I apologize, but I really want to get through to you guys because I think the retail trading industry at the minute has such a bad name of getting rich quick, which it is not. You should be in the mindset of applying for funding and thinking in terms of percentages, because you can relate that to whatever account size it may be. Any good, profitable, consistent, real trader will tell you the exact same thing. So if you're following these people that are just talking in terms of money, don't listen to them. Think in terms of percentages. So I didn't actually make 56 grand. However, I did make 14,000, which I'm going to share with you guys just so you can see my entries, not to flex any of that. I don't care about any of that, but just to show you guys the transparency of these positions. 13,500. I apologize. That's it there. If you guys can see it. 13.5%. We'll scrap the video, we'll do it all again. I think I actually took maybe some more trades the next day, maybe lost one, won another, and I think it totaled out for a total of 14%. Regardless, incredible return with very, like I say, simple elements. The key to your success in trading is confidence and execution. And how do you get that? Of course, you can do all the things off the charts where you work on your mindset, you meditate, you eat healthy, you exercise. But in terms of me, how do I get that confidence on the charts? I never fully closed positions. I wouldn't have been able to catch this 6% trade if I hadn't have had shorts from the top. It's very, very important. Let me show you guys my overall swing positions on gold as well that I'm currently holding, just so you can get an idea of why I had fun with these day trades. So just sharing with you guys my swing position I'm currently holding on gold. I am also holding shorts from this point here. I think I have shorts from around here, which I am still holding, and these are just little anchors for me, but they're running a very large amount of pips, so they're actually looking really, really good. And why did I take this? Well, it was a key psychological level of 1680, but it was also a really nice point where gold was expected to have a turnaround. So we got this 1, 2, third drive lower, and bounce from here was really, really nice. My stop loss was based just off this low. If we had taken out this low, then I wouldn't want to be involved in the trade anymore. And for me, I can see gold going a lot higher, but this is something that I just shared with the private community. So yeah, that's my positions on gold and how I managed to catch 14% in a matter of a few hours. So I hope you guys enjoyed this video. Please like, subscribe, leave a comment, and let me know what you think. If you like this trade breakdown, let me know. If these tips helped you, then again, please let me know in the comments. If you have any other psychology tips that you want to share with everyone and how you control your emotions and manage things better, please feel free to leave them in the comments. I get back to everyone and you can share ideas with each other. So thank you guys for watching, and I will see you in the next video.